Hello, hello, hello. Welcome now, Stock Trades. How's everybody doing? What's going on, guys? Okay. Today's a good day. Today's a good day. It's funny. It's funny. So today is what's today's date? June 14, right? June 14. So let's go ahead and I literally said this yesterday. Let me zoom on this. It says yesterday, which was June 13, right? Because today's the 14th, right? I said, this is very good. I'm glad to see that Clover's part of the lawsuit. Who knows? You might even get lucky and might get recalculated to 3.5 stars. That should bring us on a pathway to 4 for sure. I was just saying this late at night, and I woke up this morning. I said, well, okay. Well, that was fast. All right. Well, let's talk about it. Okay. Let's talk about it. So let's go ahead and pull this article up here. And so CMS recalculated it, and we got 3.5 stars. How are you doing, Patrick? Go big or go home. Guys. You know what's funny, guys? Everyone, even Graham Stephan. Like it's just funny. It's like wait till, because he knows who I am. They're all like making fun. They're like, man, what is this guy talking about? Talking about Clover and whatnot. I've been in the game for. I know, there's some degree of speculation, of course, right? Chapter 1 of The Intelligent Investor. There's always some speculation, but the intrinsic value doesn't fail us, right? That is our guiding GPS light, right? And a little bit of understanding of competitive advantage never hurt anyone. And Clover checks all these boxes, but yet for some reason, this thing went down to 60 pennies, 60 pennies here. And then someone posted on Twitter just today, and it was like hilarious. This is kind of the this is all Clover investors that bought Clove at 60 cents. We're all dancing right now. We're all old and tired. I'm here. I'm clapping. I'm still excited, right? This is Patrick right in the front leading the way, right? We're all like tired and just exhausted from the sheer bullshit that these short sellers and all of the negative publicity is happening in Clover. But you know what? We got our how you doing? How you doing, Mr. Dish? What's going on? I know it's you, right? So but it's more for other people so they know. So interestingly here, people are asking about the gold cross. Well, the gold cross happens when this yellow line here that's why it's called the golden cross, right? And it's if you were to extrapolate it here, kind of draw a line here. I mean, we can. Price actions are so difficult to predict, but if we were to just kind of do a trend line here and just kind of trend it, do that system of equations that we're talking about here, we can kind of predict when this thing might cross. And it looks like it might cross on June 28th. I mean, that's a couple days from now, guys, right? So that's kind of that, but again, things can change, right? So we can do that, do a little system of equations there. But, people are saying, no, okay, yeah, this is good, guys. I mean, yeah, so we're doing pretty good here. Let's, they went ahead and fixed this up. They're very pleased. They're very excited. And, this is the best line here. Ready? No, this line here. We had previously communicated. Let me just highlight it for you guys so you guys see what I'm reading, right? Let me kind of zoom in a little bit too, so you guys can see what I'm talking about here. Does that help? Okay, so we had previously communicated and planned to operate with 3 stars, rating for our PPO plan for 2025. And again, that was the thing that was really worrying me. I said, man, they really got to think of another revenue stream. And then the SaaS business came online. But then now, this recalculation to 3.5 stars significantly improves our financial outlook for next year. We believe the improvement provides us with the opportunity to accelerate our membership growth while maintaining and growing profitable. So this is really good. And, obviously the CEO, the CFO here is very excited. Peter right now is pretty much, I'm sure if we look at Peter right now, I think Peter's right here. Peter's in the background, right? That's Peter right there, right? Right, Pete. Let me just mute this here. This is Peter right here dancing, right? About to post on his LinkedIn with his all motivational tweet, post that he gives. Freaking funny. All right. So this kind of takes care of what Belize was saying here. And he was commenting on this. I mean, our stock terminal was lit this morning. It was lit. People were going pop, 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 pop. It was freaking awesome. And that's what I like to see. Right. So this is great. This pretty much talks about what we just mentioned here. Overall, also just very quick here. Smart money's coming back. By the way, smart money is in blue, dumb money is in red. Again, this is like nice data that we get because your brokers sell the information, and we can track SEC filings over $100 million. And you can basically see that smart money's coming back. So that's gone. We talked about that. Oh, Mr. Lilla Norman. I can smell a YouTube video coming from Big Al. Yes, sir. Yes, sir. Here it is. Just want to give you a nice shout out. All right. And then let me go ahead here. Oh, good. And thank you, Chris, for liking my post with Andrew Toy. I'm curious. Oh, we're not even connected. What do you do? I'm putting you on blast, man. I'm sorry. Well, it is on the internet. So I'm gonna go ahead and I'm gonna send you a connection. Right? I'll send you a nice connection. Okay, so let's go. We finished that. So we got that out of the way. Okay, so now let's go ahead and kind of look at Clove right now, and kind of let's refresh all these. So year to date 16%. Year to date down. Year to date down. Humana is down negative 23%. United Healthcare down negative 7.79%. Guys, this is really good. I mean, holy shoot. Wall Street's recalibrating now, and they're like, well, crap. This may not be a meme stock. Oh, shit. Yeah, exactly. Go float yourself. You know what I mean? So how you doing? Oh, man, there's only one God. And that's Michael Jackson. I'm just kidding. No. Okay, so I was so happy about this opportunity or announcement this morning. I'm making up words. All right, so let's go ahead and kind of do this because, this changes the whole dynamic. I mean, I don't doubt that these guys can grow MA plans now at 40%, right? So if we were just kind of go here, we're going to do 0.05%. We're not going to go ahead and do the SAS right now. We're just going to go ahead and do that. We're going to go ahead and hit 65 right now here. Go 10. I would say they can easily grow 40 now because I don't think they are going to return to high growth, so 496. And you can see just from this perspective, from the AMA plan and growing. In fact, you could just make it respectful and say, you know what, screw it, we're just going to do 25%. Just from that angle, just 25%. I mean, you can go anywhere between $8 to $24, and that's just MA plan. And this is 25%. That's a respectful amount of growth from 1.3 billion. Right. So now let's go ahead and we can open up another intrinsic value here and kind of do 2 and just add those things. So this is all speculation, right? I don't know this is going to be the case, but on average, they make around 15,000 per person if they just take on a little bit of the risk for the ACO. For the SaaS business, they got around 3,750 people. They right now have they said 1,000 people lives under management, maybe for Counterpart. That's about 3.7 million. So 3.7 million. So if we were to kind of do another intrinsics and just do 3.7, but then we would go ahead and do 0.2. And we go ahead and do this. That's 0.74 of a million. This is nothing, right? That's nothing of free cash flow, right? So 0.74. Do 10, but this time we're actually going to do 45, right? And then we'll go 496 just to see kind of what the price is. So as of right now, I don't know what the revenue is, but just based on this year, I can only imagine they're going to have maybe 3.7 million. So the SaaS is not really going to add that much. However, if we get to 200,000 lives, which is kind of like what they used to be at, right? Imagine if they get 200,000 lives, Well, let me make sure that's 200,000. Yeah.
200,000.
Now we're talking.
750 million.
And now this is 750 million. So then you go back here and type in 750, right? That's 150 free cash flow. And then we can just kind of say, we'll grow this modestly too at 25%. Then we can get this 20, right? So again, this is kind of trying to estimate what that future SaaS can look like at 25% growth rate with 200,000 lives, assuming 25% of what they normally get with the 15,000 is all speculation. But if you take 20 plus 8, so you just take the 8.83 plus whatever this one is, 20.37, you get around 29.2, which is right around that 25-30 benchmark, right? So this is pretty good, guys. This is pretty good, right? So I'm very optimistic. Again, it's the question that I asked myself is, it's like when. It's not if a millionaire is going to happen. Is essentially when is this position going to be multi-millions, right? So that's kind of where we're at right now. So this is great news. Everyone, Chamath, Chamath knows about this. Everyone knows about this, right? He can play his, stupid poker face all he wants. The only thing he's lying to is himself. I have an X-ray in my, I have a CT. No. I have a functional MRI scan of his brain from my eyes, right? And I can see his amygdala firing from his bullshit, right? So, yeah, guys, this is great news. This is great news. So that's pretty much all for today. I mean, honestly, I wasn't expecting making a video today. He posted this 3 hours ago. He said, CMS recalculated Clover's 2024 star ratings, and we have been awarded improved 3.5, which affects the 2025 year, right? We've been paid 3.5 for the last 2 years, which, in period in which we've developed significant momentum, in which they have. This change keeps us 3.5 for third consecutive year. And who knows, this might leave it, because the thing is, Andrew Toy, him getting 3, he got scared, right? And he made precautions to make sure he's going to get 4. So who knows, we might get 4 stars in 2026, which is what a lot of people are talking about in our stock terminal, right? And people that want access to our stock terminal, we have 2.5 billion data sets. I'm just going to keep scrolling here. These are all the data sets we have access to, along with price targets, et cetera, everything we have to offer, analyst price targets, you name it, we have it. Use the coupon code, get $1,000 off. And he says here, we're excited for what this means for us as it eliminates the business variable. Lets us invest in our planned product for growth. It keeps us focused on adding momentum to our flywheel. So for people that understand what a flywheel is, whenever I think of flywheel, I think of Amazon, because Amazon, this is the guy who coined the flywheel model. So it's very clear that Andrew Toy is an entrepreneur. It's very clear that Andrew Toy has learned from Steve Jobs. It's very clear that Andrew Toy is a really good future CEO, or CEO, now CEO of the company, but great, Vivek for choosing him as when Vivek was the previous CEO. So you could see kind of the flywheel model is honestly this: traffic, click, revision. They got revisions, and just this flywheel business model of someone coming in and coming. Essentially, it's just continuously positive feedback loop where the customer experience is doing good. They get traffic, sellers, but then from the health perspective. So this is actually really good. Let's go ahead and kind of see who commented. I'm curious. I commented, but let's see who else. I like it a lot. This guy's really happy. This guy's good. He's so happy he liked his own comment. Oh, God. Okay, let's see. All right. Oh, we got 10 more comments. Let's go see what else we got here. Oh, one more. Very good. Very good. Yeah. Good. Okay, guys. Oh, I know. He's gonna be so salty that he's gonna start selling salt with his coffee. All right, guys. So let's see here. And that's all. It's all. I'm all for funs and giggles. So what's to stop Humana or other players not to use their own AI? Well, actually, if you go ahead and read the SEC filings, their 10K report, it actually says here our competition. They actually acknowledge this, Mr. Starbucks. They do acknowledge that Humana and Oscar and all that they can make their own AI, and there's a lot of difficulties in the business. So of course that is definitely an issue, right? And they have acknowledged it if you read their annual 10K report, right? So it's always important as an investor to read these, because that's what Warren Buffett does, right? To read these to really understand your company, right? All right, so that's kind of it right there. So 40% growth rate, absolutely not. The growth was in segment we don't have now. No. I agree with you. We don't have that right now. But if they turn on that ACO business, they were growing at 100% growth rate, right? So I'm just taking 40% of that. But even then, I removed it and I did. Oh, where'd it go? I removed it and I put 25%, right? If you were astute, you can catch that right here. I actually put 25%, which is still $20, right? So there's a lot of upside to this, and it's very clear. Why would Clover put $20 million, for share repurchase buyback? If you actually looked at his annual share report meeting, again, I cannot broadcast this because this is just for shareholders, and the problem is if I broadcast this, it's going to be on YouTube for non-shareholders. And the issue is this is against Clover's rules. So I have to respect Clover and Andrew Toy and his rules. So I wasn't able to broadcast the annual shareholder meeting. It was like 20, 30 minutes or so. It was like 20 minutes and 53 seconds, I think. Right. Anywho, so you go ahead and listen to that. And they talked about the repurchase repurchase buyback program. And they said that this will be great because we can catch the upside of Clover. They're not going to purchase 20 million shares for what? For like $3 share price, $4 share price. This is a mega. Like this goes to like, let's say 20. That you take 20, multiply, let's say by 20. I did not do that correctly. 20 multiplied by 20. That's $400 million. That's $400 million. You know what I mean? If let's say $25. That's $500 million that they can get just from this. Just from that, and that's 500 million is pretty much going to be, really great for just kind of the, the operate, the operating expenses, and I mean honestly, growth. I mean whatever Andrew Toy wants really. Let's see what else here. Yeah, it is because we are the Tesla of data. Great news. Boom, hell yeah. Clover has the first mover advantage. They already have the training data, absolutely. And they take those 80,000 patients, but they did some sophisticated machine learning studies to turn those 80,000 patients into millions of patients. I love you too, Patrick. This is very exciting because, we're finally starting to see this thesis come true, and it just feels good. Feels good. Oh yeah, we talked about that. I hope never under one. Honestly, I hope we do. You know what I mean? Because I want to be. I want to do that 60-cent dance again. But I agree. We may have maybe seen the bottom for that forever. I don't know, but I think so. So average 182, one free cash flow positive. So with this in mind, potentially 2025 or 2026, I don't know, right? But if you recall, even for my first letters of Clover, I said 3 to 5 year price. 3 to 5 year price target from 2021. So, we've always had the timeline of 2025, 2026. So I'm glad that we're finally coming into here, right? When will financials? Oh yeah, Jeremy, come on the CLOV bandwagon. Oh, they will. They'll all will, and we'll sell it to them. We'll sell it to them because that's what smart money does, right? So Q3 net income positive. Who knows? I mean, maybe, especially with that counterpart. I don't know, with new numbers. I mean, I'm looking. Listen, guys, 2025 is going to be very, very. We might be free cash flow positive in 2025, right? Because this removes that 0.5 star deduction. And imagine if we get freaking 4 stars in 2026, ladies and gentlemen, this is it. This is it. Like I'm going to have to plan for a summit, and we're going to have to come together and just dance and drink Clover beer or whatever. I don't drink beer, but we can put food coloring, organic food, green coloring in our food and have. I'm just kidding, it's too much, right? But this is going to be very, very good. I'll check Peter's LinkedIn post. Ooh, okay, good. Let's see this here, Mr. Pita Pata here. Let's see where are we at, Peter. Oh wow, it's not even up my. Let's see here. Peter. I have to respond to Peter. Peter, if you're watching this, I'm really sorry, Peter. I know, you're busy too, but I'm doing my rotations, and I'm really busy, so I don't have time. So I will respond to you, my friend. I will respond to you. I got you. I already read the message, so I'm comfortable sharing it to the public. It's just a nice generic message. I will respond to you, my friend. We will talk. I haven't had the time. But let's look at his post here. I agree with this. A good mentor is worth the weight of gold. Yeah, it's true. I have the best mentor in the world. Oh, good. Here, let's look at this one here. Very good, very good. So let's go ahead and kind of zoom in. Thank you, Belize. Belize always got it. He has our back. I'm excited to share CMS's decision to update and increase our PBO star rating for 2025. This recalculation to 3.5 stars significantly improves our financial outlook for the next year. Oh, hell yeah. And we believe it provides us with the opportunity to accelerate. Ooh, look at this. It provides us with opportunity to accelerate our membership growth while maintaining and growing profitability. I'm very proud of the team, and I'm confident about Clover's momentum. Oh, Peter, you're saying all the right words, Peter. We haven't even gone out on a first date. Oh my God. Okay, who the hell likes it? Let's see who these people are. Good. Oh, I think this is Brown Health. Very good. Oh, financial leader. Very good. Financial leader. Okay, good. Oh, Belize is always on it, man. Oh my God, I can't wait to, who knows, Belize? You may go to Belize in 2025, my friend. All right, this recalculation, yes, absolutely, and it will. It's going to increase their growth. That's why I was upping the growth now, and we believe it provides us with opportunity to maintain. Absolutely, St. Patty's Day 2025, baby. Fake news, Belize. Fake news, right? Come on, honestly, man. Honestly, I'm gonna create an indicator called the Gordon indicator. When the Gordon indicator is hot, when the Gordon is angry, that's when you got to buy. When the Gordon is bullish, you got to sell, right? All right, let's see here. Hey Doc, what's going on? When are we gonna go to the moon? Anyway, so happy we started getting some absolute. I'm so happy too, man. This is so exciting, guys. I mean, this is it, man. This is what it's all about. So I mean, the covered calls are a bit risky now. I'm sure the covered, options chains are going to change soon. And, I think once it gets to a price target where it's near a ceiling effect and retail takes it above intrinsic value, a good example here, we could do, just kind of do this here and just kind of give you kind of a nice understanding here. Intrinsic values in red right now, we're undervalued still. I would say, in my opinion, right now, financial advice. But once we get to, overpriced levels, instead of, I would sell covered calls, because I'm like, I already want to sell, might as well sell covered calls and make that money and mooch it. Right. And then maybe we'll, get the shares for free. Right. So you could do that. And so there's that. Belize is always on it. He's an amazing asset into our group. Abso-freaking-lutely. Dish 2. Man, we got such a good team, guys, in the stock terminal. It is unbelievable, right? We have such a good team. Oh, shoot. Gordon infected Irish. Oh, no. Right? I know. Who knows? It's so funny. That's, it's good. But here's the thing. I like when people have opposing views because that's why I like to read these annual 10K reports, because it shows me, did the company think about failure? And they have. That's how successful. If it was all cherry picked and roses, then not a good company, right? So thank you. Yes, I'm only selling puts right now, or maybe one. Yeah, exactly. Puts are great, right? Good. Well, ladies and gentlemen, this is very exciting. This is very exciting news. What is it at right now? $1.12. This is great. And people, look at this now and they just hit max and they're like, oh, I'm not touching that. I don't want to touch that. Ew. Right? They're going to say that. But then it's funny because like when Jumia, if you look at Jumia, and then if you look at it right now, like, oh my God, that's good. Oh my God. Oh my God. Whoa. Ho. And then you look at it long term, it's like, oh my God, I don't want to touch that. But then all of a sudden it's starting to grow. And then, once it basically gets up to here, people are going to be like, oh my God, I love this stock. Oh my God, to the moon. Right. And then we can get that momentum going and we can finally get back up to these levels. And all you hear that been, buying the dip. Oh, we got another penny. Oh shoot, got another penny. Right. Literally 9.57% on the day here. People that, again, being greedy when others are fearful, they're gonna get rewarded. So that's just how life works, right? So very good. See what's going on Twitter here. Awesome, awesome. It's just funny because this lady here posted about Clove, and it's funny because she talks about Clove, Bertha Coombs. She talks about Clover, and she's the CNS senior healthcare reporter, and she talks about how they recalculated it, and then you could see like all the other ones are like low, and Clove is like green, and everyone's laughing. It's like, oh, go, we're going to the moon, right? So it's really funny. But if you were to look at her really quickly and type in Clover Health, I'm curious to see if she's made posts before about Clover. I don't know if she has. I just really wish we had the ability to see someone's post and search for them. Ooh, look at this. I haven't seen this video before, but this may be good. This is Bertha. So, oh my God, what a joke. They're trying to make our CEO look like a clown. Clover Health Sanjutory welcomes support of meme traders. Right? Let's see here. I hate the word meme, guys. I really hate that word now. So let me go ahead and let me just remove this right now. Stop the sharing of the screen so I can share the audio to this here. And then I'm going to mute myself. Let me just play this ad here. Okay, so she's like, holding the pot of gold for the future of Clover Health here, right? So let me just make sure oh shoot. No, I did it wrong. You guys won't be able to hear the audio. Let me share it again. Hold on. Okay, good. Now the audio can be shared. I'm going to mute myself. Let me know if you guys hear it. I haven't seen this before, so maybe I have. I forgot. Let's see.
But you partner with doctors to give them insights into their patients.
Yes.
But you don't charge them a monthly fee for those insights. It's a business model that a lot of people don't really seem to understand.
Sure, absolutely. So we build Clover Assistant is our flagship platform, as you say. We do not charge for it. We provide it to the physicians because we're a health insurance company, right? And when our physicians deliver personalized, data-driven primary care, our members get better care because of that. And when they get better care, they get better outcomes at lower costs. And that does help our risk-bearing insurance model. So we are absolutely winning in terms of business. We just don't need to provide that SaaS fee, which is difficult for a lot of our physicians. If you're a solo practitioner, you might not want to be you might not be able to pay software fees. You might still be on paper on the EHR. We don't want that burden. So we give the software for free. That great data-driven care is the advantage.
Yeah, so I just want to pause the video. So that's really great. They're thinking about the small provider. I think with this whole MCR thing and everyone's cost increasing, I think now they're shifting more to large care providers. But I wanted to just say something. So actually before this live, I was actually on a meeting, and I was on a coding meeting, to all the practitioners and all the physicians and healthcare providers that watch our video. I was just on regarding CDI coding and whatnot and star ratings. And I was actually on a meeting on how to code effectively with my internships that I'm doing when we go ahead and put orders and whatnot. So, Clover does all that. Clover really helps with that. And it's especially with its AI. So that really helps reimbursements because it effectively helps with that and causes kind of the whole friction between doctor and coders that kind of come back to doctors and say, hey, what do you mean by this? You know exactly what I mean, but the thing is, it has to be in a specific language. So it's hard to explain for people that are not in healthcare, but just understand that there's another dimension to this that really helps providers. Okay. So let's go ahead and continue forward.
Now you are a publicly traded company, and investors want to look and see how you are going to get to profitability.
Sure.
And you're giving up a revenue stream there.
Absolutely. So we're never saying never on anything. Right now, our core business was Medicare Advantage. We went into direct contracting, which helped us almost double, I think, our revenue year over year because we went into the fee-for-service original Medicare world. So we are increasing our lines of business within Medicare, and at some point, maybe we have others within Medicare with our software. So we're not saying, I'm a software guy at heart. I'm never saying never to anything, but I think we are expanding our product lines.
Yeah, and it's true. And that expansion has come to a reality, and here it is. And ideally, what this gentleman thought was the ACO program would be able to substitute for the lack of SaaS streaming. But then we all knew that didn't come true because of how difficult it is. The ACO model intrinsically is flawed. And we have our Mr. Greek man on the inside, who hopefully will fix it in the next 2 to 3 years. And then that will be another revenue stream that can be activated on top of all the revenue streams that we have. And that's another tailwind that we're going to get that people are not even discussing, that reactivation of ACO once it's fixed. But we will talk about it in the next couple years when it comes back. And you guys will remember this, because let it just file it away in the back of your head. Let's continue.
The other thing about Clover that's been interesting, obviously you made a big splash going public with Chamath, with the SPAC. When you think back, do you wish you'd done a traditional IPO instead?
Obviously there are other managed care companies who came out via.
So this is obviously a really good question, because, Chamath is not really liked on Wall Street. Wall Street's pretty much a dirty game. People kind of go in and out, so, so that's a good question. I'm curious to see kind of what he says to that.
The regular IPO. And when I look at them and I look at us, I think probably we all feel like we're just public companies now. We're in the public markets. There's a lot of excitement around managed care, and that's fantastic. And so I don't think that I would necessarily do anything different, but I really think of myself and ourselves as a public company doing good work for our members and doing good work for our shareholders.
And one of the things that's happened with Clover is that you have become a meme stock. We think about GameStop, we think about AMC, but somehow Clover got in there as well. And they still talk about you a lot on the Reddit chat boards.
Sure. Like a hi to everyone on our Reddit chat.
Exactly. So it's funny because, these folks are monitoring the Reddit chat boards, and they're all making fun of us. But, if you're watching this video, CNBC and all of them, why don't you go check my track record, and you'll be able to see, my, I'm not trying to be pompous. I'm not trying to be, not humbled and whatnot, but check my track record. I don't report on the news. I analyze. I analyze securities. Not a financial advisor, but I love to analyze securities, and I've developed a nice skill over the years. Right. All right. So let's see here.
Boards, if you're watching, I appreciate the support. So definitely, I think the way I think about it is boards. Sure. Like a high.
He has Andrew Choi has a message for us. He's very cute. Let me play it.
To everyone on our Reddit chat boards, if you're watching, I appreciate the support. So definitely, I think the way I think about it is, retail investors are people, right? And retail investing is democratizing access to financial products and services that maybe were a little bit concentrated before in terms of access. Clover is about bringing great healthcare to everyone in the U.S. as we all move into Medicare and access. So I think it's a great theme there. And I think it's really exciting also that, honestly, now within Reddit, there are people who are experts on Medicare who probably were not experts on Medicare before. And that's a great thing, right? Because there are seniors who need help. There are people, the program needs help and support. I think it's a good thing for Medicare that people know about it.
At the same time, there have been times when it's actually helped your stocks, when you've had short sellers that have taken aim at you. Yet at the same time, just the performance of your stock and of your peers that have all gone public in this class over the last couple of years, you're all in bear market. What's going on? What is it that investors aren't seeing?
Sure. So I think that I can't speak for all investors.
Come on, Bertha. Rising interest rates, right? Money going into money market funds, discount rate increases causes intrinsic value to go down, negative free cash flow, unprofitable companies getting hurt. I mean, come on. Back in the day, 2019, 2018, unprofitable companies were okay on the market. You know what I mean? We might get back to that, depends, but I think the market's changed in terms of the profitability dynamic metrics, given that cash was pretty cheap and Federal Reserve was essentially buying a bunch of junk, right? But come on, Bertha. I mean, that's kind of obvious, right? But okay, let's continue.
All the time, right? But people who are watching more quarter to quarter, there is just a large amount of fluctuation for the newer entrants because we're more regional. Like all of the new entrants are more regional than like a United or a Humana. So you're more subject to regional influences. And that I think is compounded by something like COVID, which then also has significant regional influences when you try and look at the major signals, right? Whereas the larger companies are a little bit more insulated from that. I think that makes it harder for investors in the shorter term to get a feel for certain statistics around the company. But that's why I encourage folks, to answer your question, to take the longer view. And actually, the retail investors often are the ones who are deeply absorbing that longer view.
Yeah, and
every time I needed a new phone, I had to switch.
And that's very true. You know, retail, you know,
So a few months ago,
we have been taking the long view here, and very good. So this is very good. I like what I'm seeing, guys. Hopefully this video is helpful. I mean, I enjoyed it. I don't think I've seen this one before, actually. This is her here. So let's see if she's a. Oh, we have some mutual people. Other reporters. Yeah, why not? I'll go ahead and send her a connect. Oh. To verify this, members know you. Oh yeah, you have to know her. You know, it's funny. There's a nice little trick you can do. I honestly, I shouldn't do this live. Never mind. I was gonna do something. Never mind. Now I don't want to blow her emails off. You know, her email. She'll be considered the meme stock employee. All right, guys. You know, how did I miss this? 35 minutes late. No, it's all good. It's all good. You know, you could go ahead and start here. A lot of good stuff. All right. Well, in closing, let's see what Clover's at. Is it still 13? No, oh, went back a penny. Oh well. Right. So very good, guys. Very excited. You know, AMC, GME, Wall Street Bets, they all made fun of us, and you know, we're gonna end up having the last laugh. Right. We're gonna make fun of them. Right. And we're gonna have the last laugh, and it's gonna be great because it's gonna be great. Right. So good luck, everyone. I'm going to get back to work, do more questions, and work. And yeah, I'll see you on the next one.